afternoon and welcome to our international webinar on Israel. The first part of today's session will focus on Israel, how it evolved from a startup nation into a scale-up nation. Manuel from Sweetwood Ventures, Isabelle from La Maison Partners and Jürgen from Mangrove Capital Partners will discuss the uniqueness of the Israeli model, the latest investment opportunities and current trends to be found there. The second part of our webinar will focus on how Luxembourg can represent or become a great fundraising platform for VCs from Israel. There, Femy from IQEQ, Thibaut from Elvinger will guide us through the Luxembourg toolbox and the different advantages of using a Luxembourg structure. As usual, you should or could use the Q&A button and also the chat function should you want to address some questions directly to our panelists. And now, without further ado, I will pass over to Manuel, the moderator for the first part. The screen is yours, Manuel, and welcome.
Thank you very much, Stefan. Thank you. I'm really glad to be part of this webinar today. First of all, because it's a very exciting time to be in Israel venture capital these days, but also since it's been a while that together with the LPEA, we have tried to organize an event to bring Israel and Luxembourg, two very innovative countries, closer one to another, and we have finally succeeded with this initiative. Now, at some point, Stefan, if you remember, we were also discussing bringing a delegation out of LPEA Luxembourg to a fact-finding mission to Israel, and then COVID happened, and that was put on hold for a little bit. But hopefully, that's still something on the cards for next year. Just on a personal note, my name is Manuel Sussholz. I'm the co-founder and general partner at Sweetwood Ventures. We are a fund of Israeli VC funds. We're investing in some of the most promising Israeli early stage and later stage startups. We allocate capital to top tier Israeli VCs, and we also co-invest with them alongside also buying secondary stakes from limited partners. My personal background is actually quite close to Luxembourg. I grew up across the border in Belgium. I spent 7 years at Goldman Sachs as a vice president in London before relocating to Israel, where I've been active for the past 12 years. I want to introduce my panelists on this first session concerning Israeli VC. So we have Isabelle, Amiel, Azoulai, general partner at La Maison, a late-stage co-investment fund that has over time built a very impressive portfolio of Israeli companies, and Jürgen Schmitz, general partner at Mangrove VC, very esteemed Luxembourg-based European and Israeli venture capital investor, whom I believe also had very significant successes investing in Israel, namely Wix.com, one of the largest Israeli success stories to date, and also more recently, and I'm sure we'll hear a lot more from Jürgen on that, a IPO through a WalkMe in Israel. Okay, let me share my screen with you guys and tell you a little bit of what's been going on in Israeli VC for the past few months. Israel has long been referred to as the startup nation. I think what's happening nowadays is probably at a very different scale than what we've known for the past few years. And literally, being named the startup nation may not be up to date so much anymore. People have been speaking about the scale-up nation. In fact, I very much believe that we're in the midst of a hyper-growth model for Israeli VC, and that we're evolving to a nation of decacorns. So just to give you a bit of a taste of what's been going on, so COVID-19 has in fact been a blessing in disguise for the Israeli tech ecosystem. So as much as dealing with a global pandemic brought a lot of hardships, Israel really benefited from this massive digital adoption trend we've seen across all businesses, and has really been a massive factory of unicorns in the past 24 months, 12 to 24 months. In terms of numbers, and these numbers are really impressive, both on an absolute level as on a relative level, Israel nowadays is counting more unicorns than all of Europe combined, okay? So let me just repeat that. Israel, in terms of its number of unicorns, 84 private companies and public companies being valued at more than $1 billion is more than all of Europe combined. And you can see that unicorn formation has really accelerated since, I guess, 2019, 2020, but has reached new highs lately in 2021. So just the numbers for 2021 by themselves are pretty telling. We've had 24 new unicorns being formed. We had 10 companies listing either on IPOs or SPACs in the last 6 months, raising over $1 billion of capital. And quite impressively, in terms of startups fundraising, Israeli startups have raised about $12 billion in just 6 months, which is by itself overtaking all of the 2020 fundraising by Israeli startups. So really in a very strong cycle for fundraising and also for exit for investors. So I can say with a lot of confidence, and I hope my co-panelists will agree to this, Israel today is probably regarded as the second most sophisticated, most compelling, and most competitive venue for venture capital in the world after the United States. Right. So what's been happening, and why is Israel propelling itself so quickly in terms of tech ecosystem? So first of all, Israeli entrepreneurs and Israeli startups, one of the things that really characterizes them very well is that they're always very much ahead of the curve. So they're very agile in nature, very disruptive. I think if you look back in history, the Israeli tech ecosystem has started somewhere, end of the 1980s, start 1990s, and very early on, Israeli entrepreneurs were able to catch the move towards semiconductors, hardware. Then around the 1990s, they very early caught on to the internet trends. Towards the 2010s, when mobile applications started popping up, Israelis were there. And now, as we're seeing a big migration to the clouds, adoption of AI, machine learning, microservices, again, Israeli entrepreneurs are very early at the forefront of innovation. Now, the second, I think, very important factor, which has very quickly accelerated during COVID-19, is that the playing field has been massively leveled. Startups in Israel, their go-to market typically is either the US or Europe, or Asia in some cases. When you are an Israeli startup, nowadays, you don't need to travel anymore to meet your potential customers. You're simply selling over Zoom. And this has basically accelerated remote sales to a tremendous extent, in such ways that today we see some of the companies that have been IPOing or coming to the public market through SPAC constructions are showing impressive growth sales. Okay, they're still growing at around 60 to 70% year on year at a very high velocity of revenue growth and revenues in absolute numbers. Thinking of a company like IronSource, which went public last week, one of the few decacorns that was just announced, $11 billion valuation. This is a company still growing at 40 to 50% year over year. It's a very significant growth there. Monday.com, another very famous Israeli success story, an enterprise collaboration tool, is also showing particularly impressive revenue growth and just absolute revenues overall. And then in terms of deep tech orientation, Israelis, as I mentioned earlier, have always been very eager and early to adopt disruptive, deep technological innovation, typically linked to strong military or military intelligence experience, for one, but also with a strong involvement from academia and technology transfer units that have been instated in some universities. So Israeli ecosystem is nowadays very focused on AI and machine learning. Think of cybersecurity. I think it's a common view nowadays that cybersecurity needs have really grown very significantly. And we've also seen, for instance, last week, the IPO of Sentinel-1, an Israeli founded business at a massive valuation of above $10 billion. This is in fact today the single largest tech IPO in cybersecurity, again, born and bred out of Israel. So for a small country of only 9.5 million people, I think it's quite impressive to see that 15% of the entire unicorn around the world are either Israeli born, Israeli bred, or have some kind of Israeli founders. Now, moving forward a little bit to what the tech and the venture capital landscape looks like in Israel, we did a little mapping over here. I'm not sure you guys can see all the logos, but it's a pretty complex, pretty sophisticated, and very competitive ecosystem. On the left-hand side, we basically are showing the early stage funds, which are very much the local domestic funds, and on the right-hand side, we're showing the foreign VCs. So obviously, our partners from Mangrove VCs and Maison are very active themselves. But next to that, you see a bunch of course, US VCs that have been very active in Israel for now 10 to 15 years. In some cases, some of these US VCs have their own dedicated team allocating it to Israel. Insight Partners, for instance, has been extremely active over the past 2 years or so, deploying several billions of dollars into Israeli venture capital. And next to that, you also have obviously the corporate VCs, which we're not showing over here, that by themselves are also responsible for very high proportion of the late stage financing rounds. So in terms of the latest numbers we've seen, as I mentioned earlier, Financing for Israeli startups has really reached new highs. We've raised about $12 billion just in the first 6 months of all of 2021. If you compare that to 2020, where only $10 billion was raised in the entire year, I mean, this is a very big acceleration. Now, mega rounds, basically rounds of over $100 million of financing, I mean, these are quite rare animals in the past. Nowadays, they almost happen on a daily basis. We've seen almost 43 such rounds in the first half of 2021 compared to 28 such rounds in the entire 2020. So really a drastic growth there, reflecting the increase in particular in growth stage financing from foreign investors. In terms of exits and I guess successes for investors, it's been a very fertile ground. We have now 12 companies that are valued above $10 billion, including 5 new companies of such in 2021 only. So really, I think as we speak about the startup nation, I think that's definitely a bit outdated. We can very comfortably speak about scale up and even the decacorn nation. Now, in terms of the performance of VC funds in a study that we did internally based on some proprietary data we collected from general partners in Israel, we see a very strong trend of Israeli VC funds outperforming their global peers year over year for the past, I would say, 8 to 10 vintages. And this can be shown both in TVPI terms as in IRR terms. Looking at the median of Israeli funds TVPIs, you see a very strong trend of outperformance versus the global VC median on the one hand. And on the other hand, when you zoom into the top quartile performance, there too, you tend to see a very strong trend of Israeli VCs performing on par and perhaps even outperforming some of the best US venture capital funds returns over time. Right, so let me then stop my screen share and move over to our panelists. You guys want to give a quick introduction about yourself? Isabelle, maybe a few words about yourself before we get started?
Sure, but you did already a great job introducing us. We started investing in Israel 8 years ago. In fact, La Maison is a holding company owned by big French industrial families. We only have families as LPs, if I may say so. And with the help of our LPs, and in particular, the Dassault family, which was a very good motto for us to invest in Israel, we started investing 8 years ago. And we've seen the Israeli scene growing, as you see your child growing and maturing. And it's true that in only 7 years, when we started investing and we wanted to be growth investors, there was not a large scene. Today, the scene is huge. And as you mentioned, there's a huge momentum on Israel and huge momentum on scaling. So when we really started, we wanted to build unicorns and to have the access. We were talking about ways, companies like this. Today, you just don't know what company you want to quote. There's so much. And really, what I think is super interesting in the Israeli scene is the very narrow connection to local partners, Israeli venture funds that are very active, very on board in enabling these companies to scale and to get access finally to markets or to liquidity events. So it's been a long journey. It's been nearly a year and a half. I didn't have the chance to go in Israel, but we thanks to tech and to all this scene, we were able to do a lot of deals still. But we cannot wait for going back in Israel and continue to invest.
Thank you very much, Manuel. Well, obviously, it's been almost all said since you put it so nicely in visuals as well. So Mangrove has been around for 20 years now. I'm one of the founders, some of people around maybe in Luxembourg certainly know me more from the context of LPEA, where I was one of the instigators and the founding president. We have started actually looking at Israel, or investing in Israel in 2008, end of 7. So it's been 13 years now. We've certainly been blessed, to say the least. Now we are an early stage fund. And this is in contrast to what Isabelle and Maison is doing, if I understand correctly. So we try to get the foot in the door at the very early stage of companies being born. And there's a whole reasoning around that strategy. It's, by the way, no different in Israel than it is for our European allocation. But out of that strategy, we have now created 5 or 6, depending on how you count, unicorns, 4 of which are really relevant because we were meaningful investors at an early stage, i.e. have a 20% plus stake. And out of those 4 big ones, 2 came out of Israel. So that's a very clear indication of the data or illustration of the data that Manuel had shared with us. And there's hopefully a lot more to come. I mean, Wix was the first investment we did in Israel. So we hit it lucky, we hit it off, and it's been a 12-year journey until it became, I think right now it's 16 billion market cap. So it's been a long journey for them. WalkMe was a shorter journey, which is an IPO that just happened 2 weeks ago. Again, from the very ground up. So that's our sweet spot, and that's our business. So being with the founders from almost from the get-go. I think from that perspective, we can only, and we allocate probably today about 50% of our funds to Israel. So that's for every fund generation, so about 100 million out of the 200 go to Israel. So we have a very pronounced strategy for early stage in Israel, and we have a whole team sitting in Israel, because obviously from managing this from here is not a feasible strategy for various reasons. So we have a 3-strong team right now, and of course we have the entire partnership around this. I think the numbers don't need any more commenting. Israel is by far and beyond the single most dense and successful tech ecosystem in all of, let's call it Greater Europe. Obviously, the other half of our business is Europe. So Europe is lagging behind a little bit, certainly in terms of density. I didn't even know that Israel had more unicorns in total than all of Europe. Hopefully Europe is catching up on this one. And certainly the trends that you've described in terms of number of raises, size of raise, number of unicorns, is something that we see also in the key European markets, particularly of late. If you look at the last year, so the last year has been crazy in terms of the 100 million plus rounds, in terms of creating, or the time to from whenever they started to become a unicorn, at least on paper. Not all of them will stay unicorns, but that's the part and parcel with the business. But I think that the similar trends, we see them in Europe, we see them in Germany, we see them in France, certainly. We see them probably in the UK, although we do focus a lot less on the UK. So it's been a trend also that has been spurred by US investors. The ones that you mentioned, and some of them are on your slide, particularly the growth investors, who are now coming to realize that, I mean, now it's not rocket science, but after they've had great successes, certainly with US companies, they're looking for the next sort of frontier. And they're picking the perceived winners in every single market, whether this is in Western Europe or EU, or whether this is in Israel. And they're deploying massive amounts of capital to those perceived winners. And I think from your slide, if I see one opportunity, I think for investors in Israel, it certainly is the growth pocket or the scale up phase, where there seem to be a lot less native competition, at least yet, versus foreign investors. At least if I look at the number of logos, and certainly Isabelle could comment more on this, because you feel yourself, I'm sure you are in direct competition with the Insights and with the Bessemers and with the DSTs and then Tiger Globals of this world, who are going around with very, very deep pockets and have no problem of dropping 50 or 100 or even more million. SoftBank, I forgot, sorry. Dropping those huge tickets onto individual businesses, which by default, at least at that stage, will become the sort of the predictive winners in their space, because once you get that amount of money, you can do a lot of good things and certainly get ahead of the competition as well. So that's been our experience. We love Israel as a hunting ground. One of the questions that we oftentimes get, and maybe I'd like to be challenged on that one, and maybe things have changed. our LPs always, or often ask us at least, how can you be competitive in Israel, coming from abroad, or not being a native investor? And there's two things. One, obviously, we have built that presence over the last 12 years, and we are perceived as a local investor from an Israeli ecosystem perspective. Second, once you create those successes for yourself, and that is not unique to us, you build an ecosystem or a network of people that you've worked with, entrepreneurs that you've backed, teams that have grown out of this, whether it's in WalkMe or Wix, for example, and they obviously create a sort of a halo effect for you. Because given the density of Israel, I mean, the word spreads quickly, and you, Manuel, certainly are the first one to attest to this. Once you're in Tel Aviv, it's so dense, it goes quick. And the third one is, and I'm not sure that this one is still true, at least for the better part of our history in Israel, it seemed that entrepreneurs, particularly those in the early stages, if they had the choice between a local fund and an international fund, it's not limited to Mangrove. They would always pick the international investor, provided, I guess.
That's not what I feel.
It's not the way you feel.
No, that's not the way I feel. I think there's a lot of Israeli entrepreneurs that still feel that some of the very dedicated growth actors, local growth actors, have still the best capabilities in helping them create a big companies. There's been a lot of fight lately, but also what we've seen in this very short time being, but what we've heard also from the local partners is that if you talk about US venture funds, they come and leave. And it's been like 15 years where you see a big momentum, all of them coming and then leaving. So there's still a lot of trust given to the local venture firms. We've seen that a lot of them have been able to bring this company to scale and have a lot of experience in bringing the companies to unicorns and decacorns. So there is fight. There is some entrepreneur that still, of course, will look for the bigger check, but I wouldn't say it's a generality.
Let me jump in here, Hans Jürgen, on this topic, because I think it's very relevant for our audience. The way we see it is, there's not a day that goes by without inside partners or one of those cohort funds.
You pick the most prolific one, yeah.
Exactly. So they're very much like Tiger Global and these guys deploying a high velocity of capital strategy. So the question to you guys, as non-local funds, how do you then compete with these folks that have been active, present, building relationships for many vintages, and deploying capital at a very high pace, also shortening their fundraising cycle towards their LPs? Talk of 18 months, maximum 24 months fundraising cycles. Also offering very quick due diligence and relatively founder-friendly terms. I think Isabelle, your point about early stage funds, I think this shows also in terms of our mapping, we still see them very focused on early stage and finding it very difficult to compete with the late stage folks like the insights of this world. So a question to both of you, a bit controversial, is how do you plan to compete with that, being based out of Luxembourg or Paris?
So sorry, I'll start. In fact, we really don't want to be seen as competitors. First, we do small checks, and we always want to be partners. So it can be an Israeli fund, a US fund, a Chinese fund. We provide, we think, and we prove that we provide value in having us at the cap table, because we represent all this huge industrial families that own basically all the sector of the French and European economy, that can really bring value and open doors to the Israeli companies we invest in. But we are not competitors. We want all these US or Israeli funds to choose us as a partner, not as a competitor. So we find our way this way. and I can clearly say we're not Mangrove. We are, we want to do still very small vehicles, invest quickly, invest in a very active and agile way, but we do not want to be perceived as competitors, neither in the Israeli scene or in the US scene.
Right.
That's a more comfortable situation than probably I am in. And again, I only say this secondhand. So first of all, we do consider ourselves as locals and certainly not fly-by or drive-by, as Manuel alluded to, which probably to some extent is even a thing of the past, even for the US VCs in Israel or foreign VCs. So we are local. We have the local roots with our founders, with our partners, with my partners in Israel, and they tell me, if you have the successes, first of all, on your plate. Second, if you have the vision that we have in the way we want to work with entrepreneurs, that is a very, very supportive cheerleader type attitude that we have towards our investors, being very close to founders, being very close and supportive, not just with the money. That is something that seemingly is resonating well. Now, one of the reasons I was told, and maybe this is a thing of the past, that some of the founders probably overgeneralized, would prefer foreign money over Israeli money in the early stage VC space, or in the early stages of their development, is that seemingly, and I'm saying this secondhand, Israeli funds or fund managers seem to be very much control freaks. I'm using probably the wrong. I over exaggerate the term here a little bit, which in the early stages is not really what you ought to be, because if you are, then you'll be disappointed all along the way, because when it comes to budgets or plans versus actual in early stages, there can only be deviations. Certainly for the first 2, 3, 4 years. So you have to continuously instill this belief and conviction, until you're not anymore, in the thesis, in the vision, in the product that these founders build. And that seemingly at one point in time was not so much instilled in the early stage ecosystem in Israel. Now, having said this, when I looked at your slide, Manuel, there's a lot more competition now coming down, facing us in the early stages. I think the number, if I look at the last 12 years, the first 5, 6 years were a lot less dense in terms of homegrown funds, even from people, particularly from people who have come from bigger organizations like Bessemer, like Excel, that have been parachuted at one point in time to Israel and then have like knocked off or locked off from their home funds and created their own. And that's been a lot more competition for us, certainly, and it still continues to be. There's absolutely no doubt about it.
Yeah. Let me switch topics a little bit here. So you guys are both active in European tech, US, Israel. Seeing a lot of deal flow there, meeting with a lot of entrepreneurs. It used to be the case that people were referring to as the Israeli discount in valuation. I personally, from what I said, I'm not sure that's the case anymore. I wanted to hear from both of you what is it that you see, what is it that you feel valuation wise? Is that still the case? Can one still say that there is an early stage discount? Has then completely changed? Maybe Isabelle, you want to lead the charge here?
I can only talk about my classification. We are a growth investor, but we have a very wild definition of growth because we are able to. So I would say that in early growth, this is where we're trying to focus, because late growth and late stage, is really competitive lately. But in early growth, I would still say there's a bit of a discount. If you compare the same peer company in the Valley. And then what we see in the round after, we do not see any more discount. But this is my feeling.
Yeah, Hans-Jürgen, in terms of the early rounds, how does that compare to the stuff you see coming from Berlin, Amsterdam, Paris, etc.?
I would not see any significant difference between those geographies versus Israel. If anything, I would have said that in the past 3-4 years, not in the last year, but before, Israel would probably have a premium over those, particularly in the areas where Israel is strong, which is tech or deep tech, technology-driven businesses, as opposed to internet consumer-driven businesses, which are not that present in Israel anyway. Compared to the US, I think everybody is at a discount, whether this is Europe, whether this is Berlin, Munich, or Tel Aviv, still at the early stage.
Agree.
I think the ratio is, if you look at every so often, there's comparisons of, well, what's the average entry ticket and the average valuation of a seed A, B round. I think both geographies work in parallel, but there's always a factor 2 to 3x difference sometimes between on average Europe and on average US, and I think the same applies to Israel. When it comes to successes towards the end or the exit, I think that discount disappears pretty much. Now we've been told that Israeli IPOs, for example, still suffer a discount once they go IPO. I think that was more true 5-6 years ago than it is today, but I don't have any data for that. Monday is a great example.
We've seen,
I don't think that was not a discount, I think.
Yeah, I agree. And even if there's a small discount with the price of the IPO, we've seen that they ramp up. So there might be still a little discount because it's Israeli funded companies, though they are only US companies at the end of the day. But what we've seen in the last year is that they ramp up big time.
I mean, if anything, then it's, I guess there's a language divide that is always going to be there unless you bring on a US homegrown CEO. We've seen it in the WalkMe IPO, just for the anecdote. A fund person was not even the CEO anymore, not because he's not capable of, but just his articulation in front of the press, in front of investors is different. And we chose the CFO, who was a very seasoned CFO, US executive. And that you see, yes. Storytelling is not their forte, neither would it be for European entrepreneurs, by the way. And as a general rule.
I agree. But what we've seen also, and Manuel, I'm sure you will agree, is that if you look at the Israeli entrepreneur today and founders of companies, you're talking to US persons.
Sure.
There's, in the new generation, there's no more accent. They are basically they had studied in the US, and you know, I've been in Israel for 40 years, and now when we work with this entrepreneur in the tech industry, they're US person. We don't even see this very cute Israeli accent.
So just maybe to bounce off that question, you see a lot of the ideas and decks coming out of Europe and Israel. In terms of the technology that you see coming out of Israel and that you find most relevant, what are the fields that nowadays you find are kind of most frontier or more of the interesting stuff coming out of Israel for you both?
Well, we think there's a huge momentum on health tech and digital health. We've been a lot, of course, in cyber, AI, mobility. But I think, and in particular with COVID, there's been a huge momentum on digital health. So this is certainly a topic where we're looking a lot at, and also a lot of companies maturing and showing revenues. But Hans, I'll let you also give your view.
I would join you. I mean, obviously that everybody's funds investment strategy to some extent that determines what you find and what you get in each market. I think for us personally, certainly health tech is a big theme in the last 4 years and in the future, and we have 3 very successful companies there already that come out of Israel, some of which are entirely US by now, others are still sort of over both geographies. Another area for us is performance computing, which is again a relatively large theme. We're not deep tech investors, but when it comes to applications that help increase performance of cloud computing platforms, edge computing is one of those key components which allow large corporations, mostly, or corporations, to cope with this huge increase in data availability and data analytics desires or needs. So there we see a moat again in Israeli tech, much of which I understand comes out of, again, the history of the military, the strong military presence, and people from the military moving into private business with a lot of baggage in terms of knowledge, notably on the data side. So that seems to be a stronghold also in Israel, and this is one of the things that we look at most.
Thank you both very much for your insights. I want to summarize our part before handing it over to our friends Femy and Thibaut to talk about the structuring part a bit more. In a few words, saying that Wix.com is a very good example of a company which is worth $15-16 billion market cap, but which is still very much an Israeli company. I think in the past, Israelis were criticized for selling a bit early, being a bit too early to hit the sell button. What is remarkable about Wix.com, but perhaps also ironSource and the latest, big success stories out of Israel is that their management teams, biz dev, R&D are almost now always based and staying in Israel. Right. I think this is really a big change compared to the past. And this is one of the areas which makes us as investors very comfortable to be dedicated towards Israeli VC, is that Israel is now laying the ground, a very strong foundation for a particularly virtuous circle of creating huge companies able to scale at very high revenue growth and revenue rates, where in the past, those foundations weren't particularly laid yet. So that's some very positive view on our end, and I'm sure my panelists will share that view. I will invite you guys in the audience to address any questions you may have to the panelists on the Q&A box. I will pass it over directly to Femy and Thibaut. The idea is to basically familiarize the GPs on this webinar about how Luxembourg can serve as a fundraising platform and as a base for scaling in the EU out of Israel. So we are, I guess, one of the biggest evangelists of Luxembourg in Israel. We have an office in Luxembourg. We're very much focused on Luxembourg ourselves. And I think it would be great to hear from you guys, Thibaut and Femy, how to practically implement that for the audience. Thank you.
Thanks a lot, Manuel. Luxembourg has been known for being the fund platform for quite some time, a lot on UCITS and retail funds. But I would say over the last 20 years, Luxembourg has become really a center for alternative assets. And among these assets, the venture funds. We will not address all the intricacies and all the toolbox of what we can do in Luxembourg. I think that we can be a solution to most of the needs in the sector. But I wanted to focus on one thing, and Femy as well. The Luxembourg Limited Partnership is a vehicle that was completely revamped in 2013. And it is at this point in time the most flexible and secure instrument that you can find in the market. In the past, we had a limited partnership, which had been copied by England in 1907. And over the course of the last 20 years, we saw that it could be better, that we wanted to be able to launch those funds in a completely unregulated way with no formality. We wanted to make sure that the limited partners would remain, would have their confidentiality, so you don't find their name on the Register of Commerce. Wanted to protect the limited liability of investors. That's always one of the big questions. That there would be no clawback, no bad surprise in that respect. And we've done that. And over the last 7 years, we've seen a number of funds which in the past were in the UK, were in the US, to discover that actually on all these fronts, Luxembourg was not only as good as what they had in foreign locations, but maybe better in terms of legal certainty. When we compare to Cayman as well, we are at least as quick in establishing the vehicles. And In terms of taxation, we provided that we're speaking about funds. There is no direct taxation and no withholding tax with a complete tax transparency. So in that respect, we've been able to develop a tool that is extremely efficient. And nowadays, most law firms are able to provide you with a limited partnership that meets international market standard. Femy will tell you more about AFEMs and how AFEMs can help you in your fundraising throughout the European Union.
Thank you, Thibaut. So Thibaut has just presented what is the limited partnership. It's a vehicle. It's a vehicle in Luxembourg that can be structured as a fund to allow you to do those transactions, to buy those investments and those portfolio companies in Israel and elsewhere. That works very well. There are hundreds or even 1,000 of those vehicles being structured. What you can do with those vehicles, you can decide that they can be managed by an authorized AFM. What does the authorized AFM give you? The authorized AFM gives you the licenses, the regulatory hosting to allow you to perform your transactions in a fully compliant manner. So those AFMs, they can apply on behalf of the fund or for the European passport. This European passport will give you the right to market your fund and distribute the shares of those AIF, those limited partnerships, if it's a limited partnership, in one of or all the 27 EU countries in Europe. And then what is quite important as well, and I'm going maybe to stop here and to explain a bit more about marketing, pre-marketing, distribution, because it's not an easy topic. You want to onboard European investors, you will need a European passport. But marketing is 3 steps. You have your route to onboard the European investors is made of 3 different steps or activities. The first one is the pre-marketing. What do you do before? And those rules are about to change in the coming weeks with the new European directive on pre-marketing. So what do you do before to approach investors, to speak about your track record, to your pipeline of companies? That is pre-marketing, and there are rules defining what you can do there. And then you have the active marketing, is the registration of the fund in the countries where you want to onboard investors. There's a little process of a marketing notification. This can be done from Luxembourg using an AFM hosting, a company that will rent you this capacity, and to allow you to register those funds for marketing in the 27 European countries, or only 1 or 2 of those 27 countries. And then the last activity, so the first one, pre-marketing, what you do before. The second one, marketing, what do you do to enter into those countries. And the last activity is actually the distribution. It is meeting those European investors to propose them a subscription document to speak about your strategy. That is really distributions. Again, and those 3 activities are regulated in the European Union. The first one, pre-marketing, the second one, marketing, are regulated activities and governed by directive and regulations. The distributions is governed in every individual countries. The best way to approach those European investors with these 3 steps to go through those 3 phases, pre-marketing, marketing, and then actual distribution, meeting investors, onboarding them, need to be done with an AFM. And this AFM will host and onboard your limited partnership that Thibaut clearly explained, structured as an AIF and as an alternative funds, to make sure that when you meet those investors, you get them sign your subscription document, you are compliant with the European directive, with the AFMD directive, and with the different European laws in the different countries. That's what an AFM does. It gives you the right to approach and onboard those investors to invest in your portfolio companies with your fund product wherever you want in Europe. So that's about marketing. I cannot explain it much more in detail, but what is quite important as well, us as AFM, and I am managing director of the IQQ AFM, we can not only we can work with you as an investment manager if you are regulated in your country. As an investment manager, you have a proper license. But if you don't have a license, so if we cannot delegate to you the portfolio management or the risk management the way, we can take on board this responsibility as a portfolio management, work with you as an advisor, give you the maximum freedom that we can according to the law, but ensuring that your transactions, you signing the deal on behalf of your fund and your LPs is done on a smooth and efficient manner. That's what an AFM does. It does that out of Luxembourg. And by the way, there are other AFM in other jurisdictions that will do exactly the same in Europe. However, in Luxembourg, there is an ecosystem there where there are many third-party AFM, not only IQQ, but other AFM that do that very well and allows you to have a great flexibility and a good choice in terms of service provider to ensure that you onboard your fund, your investors in an efficient manner. This being said, the last point is that those SCSP, once they decide to select an AFM to manage and to ensure that what they do in terms of investment, but in terms as well of fundraising is done in a compliant manner, then they can structure this SCSP or this limited partnership as a RAIF, which is a fund vehicle that they give you more options in order to structure your investment. So that's basically it. And that's what an AFM is giving to you, and it's giving you the right to set up your RAIF, to market your shares, and to do your investment from Luxembourg, but even using the license of a Luxembourg AFM. That's in short what I can say about AFM, RAIF, marketing and approaching onboarding investors. However, there is one thing you should know. You can as well set up a Luxembourg vehicle with non-European investors. There is another option that Thibaut is going to further detail and explain.
And in a way, thanks a lot, Femy. I'm glad that we're finishing our presentation on the structures on that, because I see that on the Q&A, Diego Santiago has asked the question, how Luxembourg works better than Israel for VC funding. The price and regulations in Luxembourg are 8 to 10 times higher. Is there a competitive advantage on the financing through Luxembourg? And in a way, this last bullet point is also an answer to that. Either you want a European investor, and indeed that comes with regulations, that comes with limits, at least in all the countries where private placement regimes are not allowed anymore. But in all the other ones, and also outside of the European Union, an alternative to the structure Femy discussed about, which involves an AFM, a depository, etc., it is possible to use a very simple limited partnership without an approved AFM. And with that, you can fundraise all across the world as well, and in Europe, in some selected countries. And that would be by and large the same price as what you would have paid for a Cayman structure or for a domestic structure. And the level of regulation is very limited. There is also complete freedom in terms of which gap you will use, and there is a complete contractual freedom in this vehicle. I hope I've addressed the question and given as well a way for someone who would be thinking, okay, what should I do? Should I have a European leg in Luxembourg and a US leg in Cayman? It is possible to have the same GP with one fund which would be NIFMD compliant and one which would not pay all the costs involved with the NIFMD. Is there any question in that respect? Manuel, is there any question that you would like to ask as well?
I think it was pretty clearly summarized.
I have a question. Since we have the benefit of practitioners around here as well, including Manuel from an investment perspective, Manuel and certainly Isabelle. Isabelle, are you using European structures to get into invest into Israel?
Yes, we are using SICAR, RAIF, that is managed by IQEQ, as a matter of fact.
And have you considered alternatives to that, since presuming that most, if not all, of your investments go towards Israel? But I'm speculating here.
No, so we have different vehicles, but the two that are investing in Israel are Luxembourg based, and we are willing to pursue in this way for our next vehicles. I think there's something that is important for tax perspective, because as a matter of fact, when we started investing in Israel, we looked at the point of not having a permanent office in Israel for tax issues. This is what we do, basically. But we had talked at a point with people within Arbor West to partner together. But because of the ruling that they were willing to have, we didn't do things with them, which was good because we finally did our way alone and we did well. But I know there's an issue in not being permanent also in Israel.
Yeah, there's another issue that's around, and it's probably related to this, and I'm not the expert in Mangrove for this, but around carry taxation. Depending on what percentage of your investments are actually in Israel and contribute as a consequence to your carry versus non-Israel deals. So there's a few complexities. Just from my perspective as a witness, having set up now 6 funds all in Luxembourg, I'd always use Luxembourg, although it hasn't become easier, to be very frank as well. And it certainly hasn't become cheaper. That's true too. But if you address yourself to an international circle of investors, of LPs, and from very different geographies, right? It could be Europeans, could be Americans, could be Asians. What I have seen year in, year out is that at least the structure that you can use, and it's now the RAIF in our case, it used to be the CCAR before, is a one size fits all.
Yeah,
and
I agree.
You don't have to create cascades or spider webs of structures around this to satisfy specific national needs of an investor, depending on his origin. And that in itself, if you weigh them both, the cost of setting it up on the one side, but the cost you save because you don't have to set up anything else, is probably balancing itself out.
Yes, I can add something to that. If I look on the funds we are managing out of our FM, and I think it's the same for most of third-party FM, if I look at the investor base, where they're coming from, because it's an indicator of why they are coming to Luxembourg, you will see that there are a lot of financial institutions based everywhere in the world, quite a lot of European families or European individuals, and some for probably 60 to 65% of the investor base, and the rest is being the rest of the world. So, and I think you're right, and maybe the reason for that is because in Luxembourg you have the right balance between where you're going to invest, the financial efficiency of your investment in terms of cost, and as well the appetite in interest of your investors on the other side for this vehicle in Luxembourg. And I think we have the right balance, the fit for all tool, as you mentioned.
What we can see also on the various Luxembourg structures is that international firms, also law firms, nowadays know Luxembourg law quite well and are completely used with most of the structures that we distribute, which means that the dialogue with foreign investors is also quite easy for that reason.
The only thing I don't want to mention is how long does it take to open a bank account in Luxembourg nowadays? That is a real challenge.
But you don't need the bank account to launch your CSP. You just need that for your GP. So
you need one for the SCSP as well. So anyhow,
yeah,
I'm looking at the timelines here. It takes you at least as much time to create a fund, to set up your fund documents than it takes you to open a bank account. But we're working on this, of course. The entire ecosystem is working on this.
Yeah.
The market is adapting itself, and there are more and more options for your GP and for your SCSP to find a suitable bank to host your bank account in a timely manner. It is still an issue, but the market is adapting itself, and many options are being considered.
I know that IQ, EQ, and notably Mr. Kansenblum is a very strong advocate and ambassador here in this context.
I can only confirm.
I think I can confirm too.
Yeah, without okay. It is. I mean, it's if somebody tells you. I mean, just for a little anecdote. So we have quite a few U.S. investors as well. I mean, they're scratching their heads about notably the KYC requirements, because and this is not specific to Luxembourg. It's probably specific to Europe. But when they, in their minds, comparing this to what they're used to by subscribing to a U.S. fund, there's absolutely no comparison. I mean, it's like 10 times easier to, and I'm using just an exaggeration, maybe 10 times easier to subscribe to a U.S. fund than it is to a European fund. And that really is another big issue to resolve long term. Not specific to our subject here.
There's one thing maybe that we can address, if we have to say one thing that is hard with the Luxembourg platform, is creating SPVs for specific co-investments. Very light structure, you know, to enforce already investments. And this is not that easy. It's a lot of cost. If you look at the US scene, it's very easy to structure SPV with a very low cost.
Good. I think we can hand it over to Stefan for closing remarks. So thank you everyone for participating. Stefan,
do we have any more questions from the audience? I'm just throwing it out there. Okay, Manuel, it's over to you, or to Stefan.
Over to Stefan. Yeah.
Sure. Thanks a lot, Manuel, for moderating so efficiently. Thanks, Isabelle, Jürgen, for sharing your insights, bringing also this dual lens on local versus international and comparing also Israel to other interesting hubs. And also thanks a lot, Femy and Thibaut, and certainly also all the other panelists for representing the Luxembourg hub, for being ambassadors of the different structures, for highlighting a few things that could be enhanced further in the future. But that was really great. Thanks for the exchange also. And we are happy that the audience joined us today. And just a quick preview of our last events before the summer break, which will be next week, an interview with Partners Group on the PEVC stories. And then afterwards, we will move on with a dedicated panel on cross-border funds directive and one on wealth management in order to demystify the portfolio construction with private equity and venture capital investments. And let's not forget the summer party of the LPEA. Physical, let's hope that everybody will be vaccinated soon. And we thank you a lot again and see you soon.